Hi guys, I'm your Dhakshi teacher. Today we are going to learn business studies for grade 9 students. Chapter number 30, statement of financial position. What do you mean by statement of financial position? Statement of financial position is drawn to show the financial position of the business, where the business is in terms of assets, liabilities and capital. What do you mean by assets? Assets are the resources of the business. They are the resource. They can be a physical resource, human resource, financial resource. All the resources we say as assets. And assets can be two types, non-current assets and the current assets. Non-current assets are the resources that we use in the business more than 1 year. And the current assets are the resources that we use in the business within the 1 year. That means we use the inventories within the 12 months. We don't keep stocks more than 12 months, that is 1 year. And the liabilities are the debts of the business, or we call it as a loans that the business have taken. So that also can be as current liabilities and the non-current liabilities. Current liabilities are the loans that we need to settle within 12 months, that is within 1 year. Example, electricity payments. We can't pay electricity after 1 year. We have to pay within a year, that is within a month. Same like that, non-current liabilities are the loans that we can pay or settle more than 1 year. Example, bank loans. If you take a bank loan, you can pay the bank loan within 5 or 6 years. That we call as non-current assets, non-current liabilities. So, current assets, current liabilities, and we have current, non-current assets and the non-current liabilities. Assets are the resources and the liabilities are the loans. And the capital is the money that is invested by the owner. So, in the capital, we get the three types of share capital. It can be a share capital where the owner as investors is own money in the business, or else it can be a retained profits. Those are the profits that the owner has earned in the business by investing his own money. These are the profits that the owner has earned in the business by investing his own money, and the share capital is his own money. We call share capital as a capital, or the equities. And then the other reserves. What do you mean by other reserves? Reserves are the collection of money that the business have to use in the future. It can be a general reserve or the revaluation reserves and the other reserves that business use in their firms. So we make a list of things, what are the assets, what are the liabilities and what are the capital we have in our business. We don't present it here and there, so we present in a chart. That we call as statement of financial position, and this name came recently. Earlier we call it as a balance sheet. If you want it, call it in a fancy term, we say it a statement of financial position. And then we first take the non-current assets. These assets are the resources that we use in the business more than 1 year. So we take property, plant, equipment. What are the value? We record there. And the current assets are the resource that we use in the business within 12 months. So we take their values and record it accordingly. And when we are writing these current assets, we write them according to their liquidity. What do you mean by liquidity? Liquidity is the ability of a resource to convert into cash very quickly. So these are written in an order where there is least liquidity to the most liquidity order. When you see inventories, you can't go to a shop and say, I have a marker pen, keep this and give me a good. You need to have cash. So that we call as liquidity, the ability of a product to convert into cash within a short period of time. So when you see inventories, you need to sell to a customer. Then you have to get to the customer's money. If you see trade debt receivables or the debtors, the people who are owed to us or the people who are to settle money to us, it takes time to collect money from them. That we call as less liquid people. And then cash is the most liquid asset in the current assets. Cash is the most liquid one because we can use the cash then and there. Then we have the current liabilities. Current liabilities are the loans that we need to pay within 12 months. You can't take more than 1 year to settle those loans. Example, your school fees. You can't pay it after 25 years. You have to pay it now. So once again, what do you mean by creditors? Creditors are the people who we need to settle their loans. We have taken loans from them. So these are we call as trade payables or the creditors. And then tax. When you have a tax income taxes, we need to pay within monthly basis. So that also comes under the current liabilities. And then we calculate net current assets. What do you mean by net current assets? We calculate current assets minus current liabilities. So simply net assets is a difference between the current assets and the current liabilities. So their current assets, the total is 500. It's inventories plus debtors plus cash. So everything you get 300 plus 500 plus 50, it's 850. And then you get the current liabilities. It's 150 plus 200. So you get 850 minus 350, you get 500, because the difference between the current assets and the current liabilities. Then we move to the non-current liabilities. These are the loans you can settle more than 1 year. Example, bank loan or mortgage. What do you mean by mortgage? Mortgage is like you are pretending you are keeping your house deed or some valuable stuffs, and then you get money. You keep your valuable stuffs and then you keep money. Example, you keep a bank loan, your house deed, and then you took a bank loan, or else your fixed deposit certificates, and you are keeping that and you are getting a money, or a share certificate. You keep that and you take money from them. That we call as mortgage. And then we have the net assets. What is this net assets? Here what we do is we take net current assets. The earlier amount how we calculate net current assets is current assets minus current liabilities. We take that value and we plus the non-current assets. What do you mean by non-current assets? That is the very top part. Very top part, that is property, plant, equipment and furniture and fittings, that is 300. And then we minus from the non-current liabilities, that is here. 200 plus 100, all this comes under the non-current liabilities. So we minus the non-current liabilities. Then we get the net assets. To get the net current assets, we are minusing current assets and the current liabilities. To get the net assets, we use net current assets plus non-current assets, you minus the non-current liabilities. Then this shareholders part, this equity, we call it as equity, or we call as fund, shareholders fund or shareholders reserve. This can be 3 types: share capital, retained profits or other reserves. And you add everything, at the end of the day you get the capital employed. Capital employed is the money invested by the business, by its own money, and the return, they expect a return for the capital employed. Share capital, retained profits and other reserves comes under the shareholders equity. It belongs to the owner of the business. And at the end of the day, we get the equation, the basic accounting equation. These parts are the assets and these are the liabilities, and this is the capital. So we show the assets is equals to liabilities plus capital. And we show it assets, our resources are equal to the loans that we took and the money that we invested, right? I hope you guys understood the lesson today. Thank you for watching this video. God bless you all. Stay home, stay safe.